Hey, what's up guys? It's Online Money 24/7 and today we're going to be talking about the January effect on the stock market. So this is something that happens every single year. It is just a trend that occurs within the stock market. And today we're going to be talking about the causations, the factors that lead to it, and what is the result that you can expect from this January of 2018. So first thing I want to talk about is the tech sell-off. So I actually got a lot of flack on my last video talking about stocks picks for December 2017 because a lot of the stocks that I talked about in there were tech stocks, and it just so happened that very shortly after I released that video, the tech stocks all went down, and this is because of November 29th was a huge sell-off through even December a bit. It was a major sell-off from investors. And that's what caused a lot of these stocks to drop. And I'll actually show you the pricing on the next slide. But this is something a lot of people were like, what the heck, man? All these stocks are dropping. But this is something that happens every single year due to the tech sell-off. So there's a lot of sell-offs from major investors because they're taking profits for the holidays, for the Christmas or holiday season, whatever you celebrate. They are taking profits for that at the end of the year, as well as for their tax benefits and stuff like that, for if they're going to be writing off some of the profits and stuff like that based on the year. If they hold a stock for over a year or with that 1 year mark, a lot of people are doing it within that November 29th to early December period to take those profits, and vacation time for the holidays also. So this is leading to the stock decline during December. This is essentially what led to it, was a lot of people just taking profits, a lot of investors selling off major positions, and especially in companies they made a lot of money in, which tech stocks have done really, really well this year. I mean, they've been doing well for a while, but especially this year, a lot of the big companies that are making a lot of money, the Amazons, the Apples, as you can see in this picture, the Googles, lots of tech sell-offs. So some companies are affected more than others, but in the next slide here, I'm going to show you a few for examples. So some of the stock prices that you could see drop over the past month have been Square. This is actually one of the stocks that I talked about in my December video. I think I talked about it in other stock videos as well, but Square is a very popular one. A lot of growth this year. And as you can see right at that November 29th mark, they already had a little bit of a correction from their big spike that they had during November, towards the end of November, which is normal because the stock should only be, around 40, a little over $40. It shouldn't have spiked up to almost 50, and that was just a correction. But then the sell-off just made the stock tank a little bit even more down past the November 29th period. Same thing happened for PayPal, not affected as much, but still you can see there around the November 29th period, big drop in the stock. Same with Nvidia. I mean, Nvidia took an even bigger hit than the other two stocks that I mentioned. Nvidia took a really big dive through November 29th and around that period through December. It started to recover a bit. As you can see, the same thing with Square. It recovered quite a bit today, as of 2%, and PayPal also has been recovering from it. But, we're leading into that January period. The same thing happened as well for Adobe stock, as another example here. You could see the dip down and the increase after that dip through leading out of the end of December into the new month of January, the new year, the 2018 time is where the stocks are starting to recover a bit. But this is a huge dip and more or less the January effect on the stock market during December. A lot of people selling off. So as you can see here, I'm circling these dips. As you could probably see it before, but I'm just circling them so you could, see it a little bit easier. And then, so what is this? The lots of inflow into the stock market is going to be occurring into January because, as you can see here, lots of dips, lots of opportunity for buying at a discount, which is definitely something as investors we want to do. We want to buy at the cheaper price to then obviously increase our net profits from the stock investments. Now, obviously, we're not trying to time the market, but if you see a nice dip, it doesn't hurt to buy then at a good price. You don't want to buy when there's a huge spike and you're like, it's probably going to dip, especially with Square. As you saw there, I mean, that huge dip, you don't want to buy at the peak of $50. It's just not very smart to do. I know sometimes it's a little bit of hindsight, but, this is clearly a trend here that there is quite a dip quite a dip going on within a lot of different stocks. So it is quite a good discount to buy now for a lot of these different types of tech stocks, or just other stocks in general as well during December. So into January, lots of inflow into the stock market. What is this being caused by? Well, we have a lot of bonus income being invested. Lots of older people get those nice big Christmas bonuses or holiday bonuses. They're going to be investing a lot of that money. Obviously, they did a little bit for the holiday spending, but a lot of that money is also going to be invested if they got a nice big bonus. So we also have that. We have people buying on the December dip. So a lot of people buying at that discount is then going to drive the price up for January as well, with more and more people buying in. And then we also have New Year's resolutions. Maybe a lot of people want to get into stocks. Maybe this is their new year to get in and become an actual investor and get started with stock market investing. So that's another factor that could also lead to more of an inflow into the stock market, causing the January effect, that increase that happens year by year. So what is the game plan for this January time? What am I going to be doing? What should you guys be doing? So during January, essentially buying on the dip. You want to put in extra money that you can, if you have that available, to get into stocks while they are a little bit cheaper, because why not just take advantage of the little bit of that dip, for profits on the January rise? If you're able to do this, it could lead to some nice gains. It could be a nice opportunity for you to get into the stock market into this period, as the January prices then increase back to how they were before from the big sell-off towards the end of November and throughout December. So guys, if you want to get started with the stock market, I do actually recommend Robinhood. Is personally the brokerage that I use because it's a free stock trading app and there are no commissions on trades. So that's what I use and that's what I recommend. If you want to support the channel, I do have a link below that'll get you signed up and started with Robinhood. I personally recommend them because that's what I use. You don't have to worry about paying any fees, like $10 per commission. It's free stock trading. There's no commissions on trades. So if you want to support the channel, you can click that link below. But anyway, guys, subscribe to the channel. If you have not subscribed yet, what the heck are you doing? Hit that subscribe button, hit that notification bell so you get notified for future videos, uploads, and all of that good stuff. Leave a like, comment down below. But anyway, guys, that's all for today's video. So I will see you in the next one. Peace out.